Who is the most famous Donald of them all? Is it Donald Duck? No, it's Donald Trump. Donald Trump is the 47th president-elect to be inaugurated next year. This is not a political channel. I'm not choosing sides here. But what I am going to do is talk about what does this mean for real estate investors like us. Will his policies usher in a golden age of growth, a bursting economy and stimulated economy, or will it leave us facing unexpected challenges? I definitely want to know what you think. Let me know in the comments below whether you agree or not. But today, we're going to be unpacking exactly how Mr. Trump's return could reshape the real estate market. And trust me, you don't want to miss these insights. Now, whether you like him or not, Trump has a significant history with real estate. He's a property mogul who has repeatedly emphasized economic growth, deregulation, and tax changes. So naturally, his presidency will have a ripple effect on our market. But what does that mean for high-income professionals like you, especially my fellow doctors and dentists seeking financial freedom through real estate investing? Now, before we get into it, I just want to welcome you back to the channel. I have so much gratitude for the feedback that I get about this channel, and I just want to give a very warm thank you to everyone that watches and tunes into the channel and finds value from it. I salute you. And that's what gives me the fuel to keep going and creating videos, because sometimes I even get burned out with creating content. But I think about when people message me on Facebook and they email me and they tell me about, wow, I watched this video, wow, it had so much impact. And that strengthens my resolve, because this is why I do what I do. What I learned from the School of Hard Knocks as a burned out dentist and implementing strategies, I wanted to try to teach doctors so that they can avoid the mistakes that I made and hopefully accelerate their path to success and financial freedom. All right, let's get right into it now. First, let's talk economics. One of my favorite subjects. I took a minor in economics and business. I continue to study economics today. It goes hand in hand with real estate investing. And Trump's always been pro-business. His pro-business stance historically leads towards economic stimulation. Now think tax cuts, right? Deregulation and infrastructure spending. Now, this is great news for investors seeking to maximize returns. With lower corporate taxes, real estate businesses may find themselves with more cash flow, allowing for new developments or acquisitions. Right? This is how the market gets going. They have less taxes, they have more cash, let's do more business. But, there's always a but, right? There is a flip side. If spending increases significantly, without adequate checks, inflation will rise. And with inflations come interest rate hikes. High mortgage rates can deter some potential buyers and eat into your cash flow if you have variable rate loans. As investors, you need to plan for this possibility. Donald Trump proposed policies that are very pro-inflationary. For economic growth, business people that say, hey, look, we want to bring him in because he's so pro-business, but they don't consider the fact that his policies are very pro-inflationary. In his last presidency, he did not hesitate to print money. The incumbent continued on with the money printing machine, and now here we are back again with Donald Trump for the 47th. Now, inflation, people say, oh, it's back under control, it's back under 2%, even though the cost of everything already went up. And now this is the new price of everything. And now we're like, hey, look, the prices aren't going up as fast anymore. And people are supposed to say, hooray. They've already cut interest rates 50 basis points at this time. Many are predicting more interest cuts, especially with Donald Trump coming. However, remember that if you have a stimulated economy, this starts to cause inflation, right? And a lot of the stuff that we're going to talk about right away here, including blanket tariffs, are going to also perpetuate the inflationary pressures. Inflation in this country is not done, and it's going to be coming with a vengeance. Nothing like and I don't want to sound like Donald Trump, but nothing like we've seen before, because inflation has not been an issue at all in this country since the 70s. A lot of you, including myself, wasn't even born yet, right? So we haven't seen it in our lifetime. Our parents haven't seen it in their lifetime. And we are headed for inflationary times. So we have to think about that from our investing eye. It's investing in things that are inflation resistant, and that will become more and more important. Things like equities tend to suffer during inflationary times, right? So this is almost the worst, even though the stock market at the time of this recording is on a tear, inflation will have bearish results. And that's a perfect segue into tariffs. Now, one of the biggest things he's talked about is putting blanket tariffs on basically almost everything that we import. Blanket tariffs are directly inflationary because the cost to consumers increases. If they're increasing the cost of all the stuff we are importing, well, guess who has to pay the higher prices? The consumers. Now, he says that he is also going to offset that by cutting income taxes, right? By cutting income taxes, this should give everybody more money to have so that even if things are more expensive, we can afford to pay higher prices. This is the sort of the thinking. Whether this is possible or even legal in Congress, this still remains to be seen at this point. I think it's a very interesting time for the economy and just America in general as its hegemony of the world. But one thing's for sure, two things for certain: do not expect inflation to stay under control. Instead, expect this process to accelerate as the debasement of this fiat currency that we call the US dollar is in free fall. Other Trump's tax strategies is that Trump's previous presidency saw real estate investors enjoying generous tax breaks like bonus depreciation, like we talked about in the last video, and the ability to leverage cost segregation. And if history repeats, this could be a huge win for us. And by us, I mean all of us doctors that are investors in real estate, especially passively. You might be able to write off more depreciation on multifamily units, mobile home parks, commercial properties, which leads to significant tax savings. We saw the phasing out of the bonus depreciation, which was just 100% a few years ago, and it dropped to 80%, it dropped to 60% this year in 2024, at the very end of 2024, and 2025, it's scheduled to drop to 40%. Well, Donald Trump said he's going to bring back 100% bonus depreciation, which would be a boon for investors. And let's not forget about the 1031 exchange. I went into it in great detail in the last video. This is a real estate investor's best friend, BFF. And this rule allows us to defer capital gains by reinvesting profits into like-kind properties. Now, the incumbent had proposed eliminating the 1031 exchange, right? So luckily for us, in respect only to this, again, I'm not picking sides here. With respect to this, Trump has no intention of removing the 1031 exchange, which is a bread and butter of people trying to reduce their tax liabilities. Let's move ahead to infrastructure spending, another hallmark of Trump's policies. Roads, bridges, public spaces. Large-scale investments here could create a wave of opportunity for developers and boost property values in strategic areas. Increased economic activity often means job growth and a demand for housing. However, as more infrastructure projects emerge, so do zoning and development changes. If you're eyeing properties near potential infrastructure growth zones, you could see massive appreciation. Right? This is where people make fortunes. QOZs, qualified opportunity zones, etc. But at the same time, beware. Political wrangling can delay these projects, impacting timelines and market timing strategies. Switching gears to commercial real estate. Now, Trump's emphasis on business expansion could spark new life into commercial spaces. This means potential opportunities to invest in retail, office spaces, or mixed-use development, areas that could see a huge comeback. Here's the question. Will remote work trends and economic uncertainty challenge this resurgence? If people continue working from their homes, commercial office demand, for example, might remain stagnant, leaving some sectors vulnerable. Now, savvy investors will capitalize at the ability to purchase an asset at a steep discount and change its use, a term we call highest and best use. Now, a great example of this happening is we see beautiful empty office buildings all over major cities in America. And by opportunists, capitalists, they see the opportunity, the entrepreneur spirit, and they started converting empty office buildings into multifamily properties and brand new apartment units where there's a big demand for housing. So how can we mitigate risks amid political shifts? Number one, diversify your portfolio. Multifamily real estate, mobile home parks, RV parks, self-storage, other types of commercial properties, oil and gas investment. These are things that our fund at Walk of Wealth Capital invest in. We invest in all of these types of alternate assets, different real estate. We just did an oil and gas deal. If you're interested in that, by the way, go to our website, walkofwealth.com. You can schedule a call with myself or one of my very helpful teammates, and we can speak more about that. Now, these have unique advantages. Each of these asset classes have unique advantages and their own cyclicality that helps to minimize risks, and it allows you, if you're paying attention, to take advantage of policy trends. And number two, lock in fixed rate loans where possible. And remember I said where possible. There are strategic times that you're not using fixed rate debt, but in general, lock fixed rate loans, which Walk of Wealth Capital, we love to invest in deals with fixed rate loans. They keep you protected from future interest rate volatility. And number 3, stay informed. All right, guys, I'm here to help you make senses of these changes and make informed decisions. All right, guys, if you found value in this breakdown, hit that like button and subscribe for more insights on navigating real estate markets as high-income professionals. And hey, if you have questions about how these shifts could impact your specific investments, drop them in the comments below. Let's make sure that you're ready to thrive no matter what the political landscape throws our way. Also, guys, head on over to walkofwealth.com for more resources and exclusive investment opportunities tailored for busy professionals just like you. Let's keep building that financial freedom one informed decision at a time. I'm Dr. Johnny Walker. I'll see you on the next video. Peace.